A bull market is a financial market characterized by rising prices for securities, such as stocks, over an extended period. In a bull market, investor confidence is high, and there is an overall optimistic outlook on the economy. This positive sentiment leads to increased buying activity, pushing stock prices upward. Key characteristics of a bull market. Rising prices. The most defining characteristic of a bull market is a sustained upward trend in the prices of stocks or other financial instruments. Investors are generally optimistic about the future prospects of the economy and individual companies. Positive investor sentiment. Investor sentiment is positive during a bull market. There is a belief that economic conditions are favorable, corporate profits are expected to rise, and overall financial well-being is on an upward trajectory. Increased buying activity. Investors actively participate in buying securities, contributing to the overall demand for stocks. As more buyers enter the market, prices are driven higher. Economic growth. Bull markets are often associated with periods of economic expansion and growth. Improving economic indicators, such as GDP growth, low unemployment, and increased consumer spending, contribute to the positive market sentiment. Low unemployment. Bull markets are often accompanied by low unemployment rates and a robust job market. Positive employment trends contribute to consumer confidence and increased spending. Corporate profits. Companies typically experience strong financial performance during a bull market. Higher corporate profits contribute to favorable stock valuations and attract investors seeking returns. Favorable monetary policies. Central banks may implement accommodative monetary policies during a bull market, such as low interest rates and quantitative easing. These policies can stimulate economic activity and support asset prices. Optimistic economic outlook. Investors have an optimistic outlook on the future, anticipating continued economic growth and profitability for businesses. This positive sentiment fuels buying interest. Impact on stock prices. Rising stock prices. The primary impact of a bull market is the continuous rise in stock prices. Investors see opportunities for capital appreciation and are willing to buy stocks at higher valuations. Increased market activity. Bull markets are characterized by heightened market activity, with increased trading volumes as investors buy and sell securities. This increased liquidity can contribute to price momentum. Wealth accumulation. Investors who participate in a bull market may experience gains in the value of their investment portfolios, contributing to wealth accumulation. This can have positive effects on consumer spending and economic growth. New highs for indices. Major stock market indices often reach new all-time highs during a bull market. This reflects the overall positive performance of the market and may attract more investors. Positive feedback loop. Rising stock prices create a positive feedback loop as the perception of wealth increases, leading to more buying activity. This cycle can persist as long as the underlying economic conditions remain favorable. Investor confidence. Bull markets are characterized by high levels of investor confidence. As prices continue to rise, investors become more optimistic about future returns and may allocate more capital to equities. IPO activity. Initial public offering, IPO, activity tends to be robust during a bull market, as companies seek to capitalize on favorable market conditions by going public. It's important to note that while a bull market is generally associated with positive economic conditions, it doesn't mean that stock prices will rise indefinitely. Markets are cyclical, and bull markets are often followed by bear markets, characterized by declining prices and negative sentiment. Investors should carefully monitor market conditions, diversify their portfolios, and consider their risk tolerance and investment goals.